Stylists say more young women are scaling back on beauty expenses, choosing looks that last longer and cost less. The recession blonde trend is taking off on TikTok, and Google searches for press-on nails are up 10% since February. Are these styling trends fashionably frugal or recession indicators? Joining us this morning is Cathy DeWitt Dunn, President and CEO of DeWitt Dunn Financial Services, to break down the chances of an economic downturn and how you can get your finances ready just in case. Good morning, and thanks so much for joining us this morning.
Thank you for having me back, Janelle.
Okay, so I have to admit, I am not excluded from this trend. Obviously, I'm not a blonde, but I found myself dyeing my own grays last week. So what are experts saying and sounding the alarm about a potential recession right now?
Yeah, there's a lot of talk, and we've been seeing everything on the news. But I mean, one of the things we need to look at is that a recession occurs when we've had 2 quarters of negative economic growth, and we're really seeing the trends, and things are not really looking so great at the moment. If we take a look, there's been tens of thousands of federal employees that have been laid off, and that's also triggered a lot of layoffs as well as in the private sector. And then the unemployment rate for April is at 4.2%. That's unchanged from last month, but last year at this point in time, we were at a 50-year low. So there are some concerning things. And if we take a look at tariffs, everybody's very concerned, when we're spending our money and we're seeing goods that are being imported, the tariffs are really hitting our pocketbook. So everybody's really taking a little bit of a pause, but that's also affecting our economy at this point in time.
So for people that are watching this and are like, okay, those are a lot of big economic words. In layman's terms, what are the signs we should be watching for, and how will we know if we were officially in a recession?
Well, I think if we take a look at what the official words of a recession are, is the fact that we have unemployment rates that change by more than 0.5 percentage point, and mass layoffs are really a big key indicator, as well as economic spending. And then we have to look at what's happening with our private sector and businesses and spending. So these are all the things that maybe could predict a recession. But it's not until the National Bureau of Economic Research, they're the ones who really call out and identify that we're in a recession. But there's so many things that we can do ahead of time if that's where we're headed to help us personally.
Yeah, I'm glad you mentioned that. So what steps can people take today to protect their finances if a downturn is on the horizon?
It just goes back to what happened when we were in the COVID era. We need to make sure that we have 3 to 6 months of savings in the bank that can help us in the event that we do suffer from a layoff. Because, when we take a look at it, we may end up having to borrow money if we don't have savings. And right now, the APR on credit cards is at 28%. That could take you 17 years to pay that off, just if you're making minimum payments. The other thing that we need to do is pay down our high interest rate debt. Speaking of credit card debt, and I like the avalanche method because that really focuses in on our high debt. We need to pay that down immediately. And I think we need to look at diversifying our portfolio. I work with my clients right now. There's so many great opportunities. And if you're retired and you don't want to have the risk of the market, you need to look at fixed rates, fixed income, and we don't need to panic. So if you've got time on your side, you can afford maybe a little bit of risk in your portfolio. But if you're retired, you really need to work with somebody that's going to give you the peace of mind and help you through some of these times that we may see ahead of us.
Well, those are such good insights. Again, Cathy DeWitt Dunn, thank you so much for joining us this morning.
Thank you for having me again.